every time I look at Roku, I want to sell it.
Welcome back, everyone, to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. Jim Cramer said the kiss of death for Roku.
That gets stuck in a house of pain, and now classic horror
You are
story.
in the house of pain, and I've got to tell you, Eazzy, I don't think the door's going to open and let you out anytime soon. I think that the forces of improvement are weighing on Roku. I don't want to be there. That Walmart deal, by the way, that was the kiss of death. The Vizio, that's what said, Roku.
I am saying now is a wonderful time to buy Roku stock. Cramer thinks the forces of improvement are weighing on Roku. I think the force of improvement is happening because of the Walmart Vizio deal. Why this sell-off is actually beneficial to Roku investors twice. He said, I don't want to be there. That Walmart deal was the kiss of death. Of course, you don't want to be there, Jim.
To being artificial intelligence, virtual reality, we're just not there yet. Machine learning. So Bitcoin seems to be another thing that the Fed is sick of. And we're short NVIDIA, it's a loser. And we're short NVIDIA, it's a loser.
You are selling NVIDIA at 130, and now you're loving it at 930.
Look, I would rather buy NVIDIA 100 points higher than it is now than buy SMCI. That's how I feel about it. And it is time right now for me to think, can I own both those for my charitable trust, NVIDIA and AMD? And I'm coming around thinking I can. I can.
In this video, I will give you 3 reasons why I'm doubling down on my position in Roku stock. Walmart has agreed to pay $2.3 billion to acquire smart television maker Vizio, a move to bolster the retailer's burgeoning advertising business as it takes on rival Amazon. The deal, however, is seen as bad news for Roku. According to analysts, Roku, which also sells smart TVs and streaming devices, has an exclusive deal with Walmart to sell products fulfilled by Walmart on Roku devices. Seth Dallaire, Walmart's chief revenue officer, said Vizio was attractive due to its customer-centric operating system, which provides great viewing experiences at an attractive price point. Vizio's SmartCast operating system has amassed more than 18 million active accounts, according to Walmart. Companies that advertise with Walmart will now be able to reach more potential customers thanks to the acquisition. The first reason is that with the recent Roku stock sell-off offering interested investors with an improved margin of safety as the management continues to execute improved margins in 2023 and reiterates positive profit margins in 2024. At the same time, I believe that the Walmart Vizio sell-off has been overly done since Roku continues to benefit from the secular transition from TV media to streaming as more platforms offer ad-supported tiers and report improved monetization. The second reason is Walmart is not competing with Roku. This is where most people got it wrong. When you only focus on one stock, sometimes investors are only looking at one stock at a time. We tend to lose sight of the big picture. In the business world, everything is connected. What's Walmart's biggest competition? Amazon, of course. So whenever Walmart makes a move, it really intended to take on Amazon in their own way, which I will explain soon. It really has nothing against Roku. Roku is actually selling their TVs through Walmart. When Walmart is reacting to Amazon, Amazon introduced ads to all of its 200 million Amazon Prime Video subscribers. And now it's going to take connected television ads on a big screen and connect them all the way down to the purchase on e-commerce platform. Walmart has now bought Vizio because Vizio has 500 million of ad sales on connected televisions, and it's going to use Vizio to sort of keep up with Amazon. You'll buy it out on Vizio TV, and then Walmart will tell you whether any consumer bought that product in the real world in one of their 4,700 stores or on their e-commerce platform called Walmart.com. That means who they're targeting for ads is totally different than the past of the Vizio's past, because Vizio used to be direct competitor to Roku, and now Walmart's going to use it to do a totally different thing, which is tie ads to purchases, which competes with Amazon more directly. So that's a positive for Roku because it sort of leaves it as a monopolist in the marketplace for advertising. What about the potential gains here for Roku in that market in terms of market share, and what could potentially do for their revenue in the longer term, given the fact that Vizio won't be a competitor? Vizio is going to do 500 million of revenues. So let's say it all moved to Roku. That would add about 30% to their ad revenue. Just the Vizio piece, not to mention what they're already growing on their own platform. So that would be a big upside driver for Roku's revenue growth. Additionally, Roku is OTT focused. OTT stands for over-the-top streaming devices. These are the fourth most common in-home access point to the internet after the big three: desktops, smartphones, and tablets. The big competitors here are like Samsung, LG, Vizio, which will now be gone, and they're all owned by these huge conglomerates other than Roku, which is owned by a single founder, really fast pivot times, really fast product upgrade times, because there's one guy that can make a decision that used to be true of Vizio. Now being owned by Walmart, we would think that decisions and changes and market reactions are a little bit slower, because Walmart processes are probably a little more refined than these founder-led companies like Roku. So I think that's good for Roku because it's the only one that only focuses on streaming. And it's an arms dealer, meaning it takes 20% of the revenue generated on the Roku platform from Netflix, from Peacock, from Disney. It doesn't sort of care who wins the streaming wars because it takes 20% of their revenue no matter what, no matter who wins or loses. The Roku investment thesis is more attractive after the deep pullback. For now, Roku has reported a top line beat in the fourth quarter, with total net revenues of $984.4 million, up 13.5%. Most importantly, the company has been able to generate positive free cash flow of $175.99 million over the last 12 months, implying that its reversal may finally be here. Much of the bottom line tailwinds are attributed to Roku's growing active accounts to 80 million, up 10 million year over year. The management's aggressive expansion in international markets beyond its main market in the US, since the US labor market and discretionary spending are still relatively robust. At the same time, the devices segment has recorded improving gross margins of negative 13.2%, up 18.9% year over year, further aided by the optimized operating expenses of $542.1 million, down 11.7% year over year. From these numbers, it is unsurprising that Roku has benefited immensely from the secular transition from TV media to streaming. This is observed in the growing global streaming hours on its platform to 29.1 billion, up 5.2 billion year over year, and streaming hours per active account per day to 4.1 hours by Q4 23, compared to 3.8 hours in Q4 2022 and 3.6 hours in Q4 21, contributing to the robust growth in the platform revenue. The same has been reported by Nielsen. As a result of the long-term tailwinds, we believe that Roku is likely to benefit from the increased introduction of ad-supported streaming tiers from multiple media giants, particularly Netflix and Disney, due to their improving ad monetization in the streaming segments and the revenue share agreement. I also believe that Roku's intermediate term prospects are likely to be positively impacted by Walmart's planned acquisition of Vizio, with Walmart's intention toward using Vizio to compete with Amazon instead with Roku. If anything, with Amazon already foregoing the iRobot deal as regulators tamp down on market consolidation, I believe that Walmart may face a similar headwind ahead. At the same time, I see Walmart offer certain concessions to push the deal through. With Roku's operating platform potentially integrated with Vizio's TVs, as it is on Walmart's on TVs, effectively eliminating any regulatory concerns on market monopoly. In addition, we believe that the Roku management remains shareholder friendly with minimal share dilution thus far, attributed to the relatively reasonable share count of 143.01 million. The third reason why I am buying more is that I saw on an insider buy on March 13th, Jeff Blackburn, a director of the company, bought 8,000 shares of Roku stock directly from the open market at the price of $64 a share, with a grand total of $500,000 plus 11 grand. Jeff Blackburn joined the Roku board in June 2023. Jeff has been with Amazon.com for over 2 decades and has been a member of its senior leadership team for more than a decade. Mr. Blackburn earned an MBA from Stanford Business School and an AB in economics from Dartmouth College. If that's not conviction, I don't know what is, because we know there are a million reasons why insiders sell, but when an insider buys, watch out, they tend to know something for them to profit, buy shares at this basement price. If anything, investors must note that the company reports zero debts with growing cash on the balance sheet at $2.02 billion. The management has also prudently made use of the elevated interest rate environment and healthy balance sheet to generate a net interest income of $92.94 million, up 140.7% year over year in 2023. Their commitment to achieving positive adjusted EBITDA for the year of 2024. I believe that Roku may outperform expectations moving forward, with it finally achieving an improved operating scale as shareholder equity further grows. That's the reason why I am doubling down on my Roku stock.
One thing that has always attracted us to this story around Roku is this idea around the Switzerland and being that party within the CTV space that isn't tied to any single large tech company or major retailer. So when you talk about Vizio might gain shelf space in Walmart, but they're likely to lose out in Target and Amazon.
Even if Walmart significantly decreases shelf space allocated to Roku in favor of Vizio, consumers will continue to look for Roku operating systems. And it's not just a branding issue, it's an overall operating system superiority issue too, right? In that the Roku experience is unmatched, I think. with respect to how other smart TVs operate. And I would encourage listeners to just search up Roku versus Vizio. Go to any subreddit. You will see that people by far prefer Roku over Vizio.
When we look at the story and what is really important to winning in the CTV space, and this is something that's, largely talked about, it's you need scale, you need engagement, and then you need monetization. And we look at, who has the largest scale today. It's not Vizio, it's Roku, Amazon Fire. Those are the two major players. Then you look at engagement. If you look at the engagement hours on Roku, it's 100 billion plus hours streamed. So this is significant scale and significant engagement. And then you're talking about first party data and the advantages that come with it from a monetization angle. Roku has been kind of the underdog story throughout this, because you've had tech giants like Amazon, Google, and Apple breathing down Roku's necks since the beginning of the story. And yet Roku has been able to edge all of them out and actually grow its market share, since its founding. And now it's in 80 million households, and it's the number one selling TV operating system for the last 5 years.